Alright, what's going on, family? I'm back with another video. Today's video, I'm going to be covering a couple of plays that happened today during market hours. And I'm going to be going over how to look at market internals and how to make some really good plays when all the stars align in the market. And I'll be digging in deep in that in this video. So let's get right to it. Give me 1 second. All right. So here you guys can see that I have SPY, I have ES, the NASDAQ, I have the volatility index, VIX, tick, and ADD. So this chart right here, I have a couple monitors. So this layout right here, I have it on a separate monitor on a separate so I have this set up on a different monitor, and I keep this open at all times. So I usually have tick on the 1 minute, ADD on the 1 minute, VIX on the 1 minute. So I'm looking at SPY, ES, and NASDAQ. So what's the reason for this? So looking at all this is essentially called market internals. So what tick is, tick shows us essentially if a lot of stocks in the market are having an uptick or a downtick. So levels of 600 or above and levels of minus 600 and below are considered extreme levels, and 0 is kind of neutral. So if we're floating around a tick of 0, I can assume that most stocks are kind of just essentially chopping around. ADD is I believe it's the advanced declining something. But what ADD shows me is if most stocks are trending upwards or downwards. So ADD kind of just takes an average of that and kind of shows me if the overall market is kind of trending upwards or downwards. VIX is the volatility index, which kind of shows us fear in the market. So if VIX is trending upwards, I can assume that SPY and ES are trending downwards because there's more fear in the market, more volatility. So when VIX is trending upwards, I can assume that SPY will be trending downwards and vice versa. ES is the futures of SPY. So these are the market internals. So let me start getting into the nitty-gritty of what happened today. So right here we opened up in SPY. Let me delete this. Clear drawing set. I'm gonna zoom in. So let's look at the overall picture here. On ES, on the daily chart here, the 21 moving average, which is considered the mean. So we were floating around the mean for quite some time. We can draw this little range here, which we were kind of stuck in for a couple weeks, or not a couple weeks, probably for a couple days around the mean. So stocks do one of three things. They do three things. We revert away from the mean, or we chop around at the mean before a stock wants to choose its direction. So here we can see that we're chopping around at the mean, the 21 moving average on the daily chart of ES. So from here, I can expect some chop around before another leg higher or another leg lower. And based off today, we can see that ES might want to try to some downside. So on smaller time frames, this is the 5 minute on SPY. This is the 5 minute on ES, opening up at 6:30. So what happened at market open, we can see that we were stuck in this range. Same here on ES. We were stuck in this range up until about 7:30. So once 7:30 hit, so up until about, so this is everything that I was looking at during real time. So let's kind of go over what happened. So we had a gap down on SPY and ES. So obviously there's going to be people covering their positions. So we're not going to get that initial sell-off right at open. There's going to be some chop around. So we chop around right here up until about 7:30. And that's when things start to get hot. So I had all this drawn. I cleared out all my charts, but I had all this drawn out. So as you guys heard me say, when the stars align in the beginning of the video, this is what I'm talking about. So we have SPY breaking this little range here in confluence with ES. So we have ADD also breaking out of this little consolidation that it had to the downside. Plus, we had tick at about 7:30. So around here. So due to the massive gap down, we opened up in the negative 1500 range. So during all this chop around, tick was going up, but we never were able to get over zero and stay above zero. So you can kind of consider this like the fade up. So you can see here, we kind of had a little uptrend in SPY. So that's what this was. So we were getting back to the kind of the mean here on tick. So once SPY and ES were ready to make a move lower, we can see that reversion away from the zero mark, and that's a bearish sign. Plus, we had VIX here make a little flag pattern here, and at the same time, VIX was starting to break above this level. So this is what I mean by the stars aligning. You want to see everything in confluence, and this is when you have to execute. SPX2 had also made a little range in the morning, and it broke it. So there was blood, and there was definitely plays that could have been taken that would have been really, really good plays. So as the market's falling, here's SPY on the 5-minute, ES on the 5-minute. So as the market's dropping, you want to see, you don't want to chase, because this is kind of what happened to me while I was watching all this happen in real time. I missed this first initial drop here, and I was starting to get FOMO because I had seen this happen all right before my eyes, but I was already done with my day. I was already done trading for the day here. So I was kind of watching this all play out without taking any positions, but I saw this consolidation here, and that's when I started to get interested for another leg lower. So let me pull up ES on the 1-minute. So I had seen this here. So I missed all this drop here. And around 7:30, I had noticed that a little H was forming on ES. And this caught my attention because in the TDG chat, we like to play fades and H plays really often, and we can kind of spot them right off the bat. And they offer really good risk to reward. So here, I was interested in playing ES to the short side. So I was going to get into some XPX puts to the downside. But unfortunately, if you're on the Thinkorswim platform, you know this, like SPX contracts, when you're trying to get filled, it's like super laggy. So I couldn't get a fill, And this is where I can say I'm kind of proud of myself because I didn't chase. Although if I did chase, it would have still been profitable. But I kind of just brushed it off and I said, okay, I wasn't going to chase it because if I was going to try to get a fill, I would have gotten filled around here. But I concluded that I didn't really want to chase. Plus, I was already done for the day. I had already met my trading goal. So I didn't want to get too aggressive on this kind of stuff. But so from here, this was around 7:30 to about 7:40, right? And look at what VIX was doing here. From 7:30 to 7:45, we can see VIX forming this little channel, this little bull flag, which gave me even more confirmation that this play on ES and SPX was going to work out. Because what happens when VIX goes up, usually ES and SPY will be coming down. So with VIX consolidating like this in a bullish pattern, this gives me more conviction that this H pattern will play out and that we'll continue to see more downside on ES and SPY. And at the same time, SPX was making this little H, as you guys can see here. So usually on SPX, you don't want to chase because especially on 0 days, your premium will get crushed even on a little bounce back. Sorry. So you want to look for these H plays. So usually what an H play is price will come down. Obviously there has to be some profit taking, and then we'll go for another leg lower. Profit taking, another H play, another leg lower. An H play again. Sorry, actually this was kind of like, so it attempted the H here, wasn't able to. We actually double bottomed and we bounced above this previous high, but we failed it for another leg lower. And you guys can see that we started to just base out. Same with VIX, we started to just base out. And at the same time, tick was starting to get above 0. And you can see that we kind of just were staying in between the 600 and negative 600 range for the rest of the day. See what was happening with ADD. Yeah, ADD started to uptrend for the rest of the day. So today was a really good day. Today would be a really good day to study market internals so that in the future, when all the stars align like this, you guys can execute efficiently. I'm pretty mad at myself that I didn't catch these plays when I was literally watching them happen real time. But I'm also pretty proud of myself that I didn't give into the FOMO because I could have just bought in here and my risk to reward would have been really skewed. So this is kind of something that you have to overcome, and it takes elite performance to tell yourself in real time that you're not going to chase. So this is something that I'm really proud of myself for doing today. So I want to go over Zoom today, an opening drive play that I took. Let me pull up the chart. What am I doing? And turn pre-market on. One second. I had called this out in the chat as well during the pre-market session. Okay. So Zoom was on my watch list because over the weekend we had new coronavirus news. And Zoom is obviously a coronavirus stock. So as more coronavirus news comes out, more people are going to stay on Zoom, meaning that more people are going to be using Zoom, meaning that it's Zoom can continue. It's good news for Zoom. So Zoom had news of, I don't know what the news was exactly, but it had gotten on my radar as it started to get hot during pre-market. So pull up the 5 minute and the 1 minute. So Zoom. Zoom had been in a consolidation up since Wednesday. Let me pull up the TTM Squeeze to show you guys. Yeah, so Zoom had been, I believe, in a 2-hour squeeze, actually. Yeah. So I was just going through my squeeze watch list during pre-market, and I had identified that Zoom was in a nice consolidation range. So what I usually do is I like to mark the ranges with S and R. And these are kind of the levels that I'm looking to play. I remember I actually had 525 and I believe I had 510 as a level. So before today, I had only seen, oh, I can't go back. Actually, let me pull back the time a little. Okay, never mind. So I had only seen this. This is what I was looking at coming into today. So, and on Friday, I had identified that Zoom was also in a 30-minute squeeze from this little range here. And I'll drill down to a 30-minute time frame to show you guys what I was talking about. But let me show you guys from here on the 2-hour. So this would be support. So Zoom was on my 2-hour time frame squeeze watch list in this range here. So when I'm looking at squeezes like this, if I want to play it to the upside or downside, initially at me as a trader, I'm not looking to play the break of 525, because if a stock is trading down here at 510, right, and it's in a consolidation range, and I'm expecting more move to the upside, I can initially look for an entry down here and catch this whole move up to 525. So even if we get rejected at 525, I'm still in profit, and I'll take my profits even if something like this happens. Plus, if you get in down here, number one, your risk to reward is really tight. So plus, you can catch a larger percentage move, and 3, you have more cushion in your position. So unfortunately, this happened during pre-market, this push here, but I was looking to play this break of 513.85 with a stop down here at 507. So let me drill down to a 30-minute time frame to show you guys that Zoom here. We can see the TTM Squeeze Pro was in an orange consolidation range here before breaking out. So I wanted to initially play this 513 break, but obviously I couldn't get that. So, but with the Zoom news that came out during pre-market, I was already bullish on the play. So I wanted to scale down to a lower time frame to see if I can find a potential entry, so I could know where to base my risk off of. So coming into pre-market on Zoom, so this is what I was looking at. So we break 513 and it now acts as support. So coming into about 525, I had noticed Zoom making a little pattern here, kind of like a bull pattern right before open. And these are the types of opening drive plays that I love to play the most. I'll show you guys why. So I identified that little bull flag pattern right before open. So it kind of looked like this. It's a little messy, but what I ended up doing was just drawing a range that I could play off of. So you kind of have to train your eyes to see like not how to you kind of have to train your eyes to see how price moves through all these wicks. And once you're able to do so, you can see that there's like a little range here. So what I did was I drew this range out. This was the exact range that I had drawn out right before the market opened on Zoom. And if you guys watch my previous video on Zoom, the play where I made 2400 on Zoom, this is the exact same play which took place. So in that video on the opening drive play on Zoom, you guys will see, you guys will notice how I talk about what will usually happen during opening drive plays is price will open up, break the little range that you have identified, trap shorts, and then eventually make shorts have to cover because market makers will push price higher, and it will be a solid opening drive play. So these are my favorite types of opening drive plays when I identify a pattern during pre-market right before opening bell, price dips below trapping shorts, and then completely just rips. So I was able to catch this move nicely, and it ripped all the way to 540, but unfortunately all the markets took a huge hit, or the market took a huge hit, which kind of brought everything down with it, and kind of invalidating more potential Zoom upside. But I want to show you guys something too. So sometimes people ask me a lot, like, how do I not get faked out, right? It's kind of like a basic general question. How do I not get faked out? So inevitably, sometimes you will get faked out. You're not going to be able to avoid it, and it's just something you have to live with. This is where proper position sizing comes in, and this is where you have to mitigate your risk and try to find the best risk to reward on all your plays. So for example, let's take the Zoom play. For example. So if Zoom wanted to fake me out this morning at this 525 level, so let's say I'm waiting for a break of this 525 level, right? So Zoom has its green opening bar. So we see this bar here. Let's go. Here. So just imagine we're 2 minutes into opening, 6:31, or sorry, 1 minute into opening, and we see this. What Zoom could have done potentially is, so price would have opened up here, we would have cracked 2750, and you can see sellers stepped in and were able to push price back down to about 525. So what Zoom could have done the next candle was completely engulfed this candle with a red candle. So market makers could have completely just pushed price down and making these buyers have to get out of their position. So that would have been considered a fake out at the 525 level. But it's something that you have to take on a play-by-play basis, because even if you're trying to drill down on looking at how the tape is here, I believe that, yeah, you can look at the tape, but it's kind of sometimes moving too fast for you to even comprehend. So that's why I kind of just like to look at the overall picture. But my point is, if you would have identified this range here, so once it would have took the opening dip and rip, so I tried to get on my play that I took on Zoom today, I tried to get my entry as close to 521.60 as possible, because this is essentially the break above level. So my stop was at this low of wick. So let's say Zoom did end up faking me out. So here I would have been in profit. Once Zoom had this green candle here and came up and rejected, I still would have been in profit. But if you took the break of 525, you essentially wouldn't have been in profit, or you would have been at least break even. So let's say the next candle comes in, right? And it completely, let's say it's red, and it completely like just dumps, right? just say it kind of looked like that, this would have been a 525 fake out. So what I would have done here is when price comes back to where my stop loss is, I would have just taken the stop, because my risk to reward was really tight on this play. That's one. Plus, I would have been sized in properly to where if I do get stopped out, it's no big deal to me. So that's kind of just the basis of getting faked out. You kind of just have to live through it and get over it. But if you're sized in 50%, 75% of your account in this one play, and this huge ass red candle comes in and stops you out, you're taking a huge hit on that play, which is why you want to avoid getting faked out so much, because you've probably had bad experiences in the past getting faked out because you were sized in too heavily and you weren't focused on your risk to reward. That's why those fake out plays have had big hits on you. I hope that makes sense. So, but on a larger time frame, Zoom did actually do a fake out today. So let's go to the 2 hour. And I'll show you guys what I mean. Let me delete all this. So as you guys can see, this is the consolidation range that I have drawn out for Zoom, right? 525 and 510. And I've been looking at this since last week. But look at what happened here. Price opened up here, spiked all the way up to at least 540, trapping in all these buyers, and eventually sellers were strong enough to push price back below my consolidation range. So this is a prime example of a fake out. And look at what happened next candle. It was red, and we're still in this consolidation zone. So this is a prime example of a higher time frame fake out. But obviously, if you were on the 1 minute, you would have caught a nice move up to 541. And you can see what happens after. It fades for the rest of the day from 541. So let me go over a couple more examples with you guys that I have written down. Peloton squeeze fake out. What happened with Peloton? I believe Peloton did another fake out as well. Yep. Okay. So another squeeze that I had seen on the 2 hour was Peloton, and same kind of play as Zoom. I identified this range on Peloton, and this is kind of the levels that I was looking to break above or break below. I was looking to get a break above 122.55 to the upside and break below 118.92 to the downside. So you guys can see what happened here. Kind of same gist as Zoom. On the 2 hour time frame, it was a prime fake out because we opened up here, price was green all the way up until 125.70, and sellers were able to step in aggressively to drop price all the way back down, clearing pre-market low, getting us back down to about 119. So we were able to break below this level here, 118.92, and get a close below it. So now I can expect more downside on Peloton. But you guys can see here, there was a little nice opening drive play respecting 122.55 as support with some upside. So this would have been a decent opening drive play, but as you guys can see, it kind of faded for the rest of the day. I want to go over Roku and Netflix with you guys because I had also drawn some ranges. So Roku has been consolidating for a while now. You guys can see this range here. So in this little range here from about October 22nd up until the 26th, I was looking for a break above or below 225 or 220. So you guys might ask why I don't draw my levels from the wicks. Like I could draw the wick here and even draw the wick probably like down here. But the reason for that is because I like to look for break belows or break aboves for the body candles, not necessarily the wicks. And the reason for that is um, I like to wait to see what um, I like to see what the end result is of the candle essentially, because I don't care what I don't care what price does as it's forming. I like to know how it closes because that's what's going to give me the information. Because market makers will try to fake people out. So in previous examples like Zoom and Peloton, you guys can see what happened here. So we have a break. So the highest body closes that we have here on Roku are these green candles here. So this green candle high was about 224.20. This was the highest close that we got. And down here, the lowest body close that we had was about this red candle here, which was the close, which is about 220.34. So this is the range I was looking to play on Roku. And at market open, Roku looked really good. Looked like a really solid play. But as you guys can see on a higher time frame, it was just completely a fake out. So we opened up here. Not Zoom, Roku was essentially a huge green candle at first. And sellers eventually stepped in to bring price lower, breaking below this 220 level. So we can see how that looks on the 1 minute. So you could have caught some good upside move on Roku, but eventually it did fade for the rest of the day. What are we at? 31 minutes. All right, I'll do a couple more examples and then I'll call it a video. Same thing with Zoom or Netflix. You guys can see what happened here. So I had identified Netflix and a 2-hour squeeze. So I was looking for a break above 490 or a break below 481.90. And you guys can see what happened here. At market open today, Netflix was at first a huge ass green candle, but market makers were big money players and market makers were able to step in aggressively with sell orders and pushed price back down immediately, coming, and we're still in this 2-hour squeeze. So let's see that on a 1 minute. You could have caught some good upside play on Netflix, but eventually it did continue to fade all day. Another thing you guys want to look out for on the 1 minute time frames and the 5 minute time frames is igniting volume and volume at the highs. So what I mean by that is usually big money players are selling into momentum. And you can usually see this when there's big volume spikes. So let's break down this Netflix play. So usually there's always going to be large volume at the market open. So a couple plays in, Netflix has a huge volume spike here. So this is igniting volume. This kind of lets you know that Netflix has some more upside potential and that the play is not over yet. So as Netflix starts to form, as Netflix starts to pull back, this is high a day, right? And this is where retail traders start to get faked out a lot. So we have the pullback. Netflix goes for another leg higher. And look at this volume candle here. This is where big money players are getting out of their position. And who are they selling to? Retail traders that are thinking that Netflix is going to continue to break high of day. And look at this volume spike here. So big money players are getting out of their position, selling it to retail traders, thinking that Netflix is going to continue high a day, and you can see what happens immediately. and those retail traders just got faked out right at high of day. So high of day plays are, you have to be really careful with high of day plays, because plus you have to know where volume is coming in, because you can't get confused that Netflix is breaking this. Like a retail trader might think, okay, Netflix is breaking high a day with high volume, but this is not the case. This is capitulation right at high of day. Capitulation is kind of big money players selling into momentum, and this also happens on the downside as well. So you have to be very careful on how you identify volume, because you don't want to be getting it confused. Plus, this comes in conjunction with retracement levels. So if with retracement levels is a topic for another video, so I'll cover that in another video, but you guys just want to be aware of where volume is coming in and where it's coming in at. So let me see what else I got for you guys. Covered XPX intraday patterns, Roku and Netflix, I covered that with you guys. Peloton squeeze fake out, covered. Zoom opening drive play, covered. So yeah, I just wanted to make a quick video to show you guys what to look for in market internals and how to manage squeeze plays for kind of opening drive plays, and to always look at higher time frames to see what the candles are doing, because it might look good at first, but as they start to close, it might price action might be telling you a whole different story. As you guys can see, I like to draw these consolidation zones a lot, and they're kind of my favorite setups to go to. So in the next couple videos, I will be breaking this down as to why I love playing these types of setups most often. Alright, so I hope you guys liked the video. Please drop a comment to let me know what I could do better or what I'm doing wrong. And I hope to catch you guys in the next couple videos. Alright, later family.